Good morning, everybody. Paul here coming at you with a Crypto Coffee update where we talk about all of the news, events, and happenings in the exciting world of digital finance known as crypto. Now, just a disclaimer, I'm feeling a little under the weather today. Kind of feel like I have a fishbowl on my head because I took some medicine. So between all the construction going on here and my own personal health, I want to say apologies for any impact that may have on the overall straightforwardness and articulation of the content. But nonetheless, we're going to push forward and do the best possible job at delivering you, the dear user, the best possible information. And to help me do that today, I have some coffee. So join me for a nice simultaneous sip. All right, good stuff. And here we are, Cryptide.cc, our lovely website, where you can get all of the crypto coffee videos such as this, even more news in case you want to read the news rather than watch the videos. That way you can kind of stay up to date and follow along. And in the blog section, we have Next Week's Crypto, which is a collection of conferences happening all around the world that you can attend if you so choose. Just another service that we offer here at Cryptide, helping to keep you in the loop of this exciting new community. All right, let's move on to the news of the day. The Mt. Gox ex-CEO has been acquitted of the most serious charges, which would be basically money laundering and that kind of criminal stuff, and has received a suspended sentence for simply falsifying records. Embezzlement, that was it, the #1 charge that Mark here was facing, but it seems Mr. Karpeles has gotten off the hook of the most serious charges, and it's no small feat, especially considering there wasn't a lot of precedent for blockchain or a cryptocurrency exchange in the Japanese legal system at the time. It took Mark over 2 years of essentially grappling with authorities to get this entire saga of the Mt. Gox episode finished up. So that's really fantastic that we're beginning to see some kind of closure, and individuals who were damaged by the collapse of the Mt. Gox exchange are starting to receive some form of recompense. So that's very nice. For more information about this, What Bitcoin Did is a fantastic podcast series. Peter McCormick does a great job. It's not without a little bit of controversy, which is always fun to see on crypto Twitter, but personally, I think Peter does a really fantastic job, and here he interviews Mark Karpeles himself and gets the primary source of the information, where Mark goes into detail, essentially saying that he was using his own funds and putting that into the exchange to help to offset some of the loss from the eventual collapse of Mt. Gox. Now, Peter McCormick in the What Bitcoin Did podcast also interviews Jed McCaleb. And Jed McCaleb is the official founder of Mt. Gox, who eventually sold it to Mark Karpeles. And Jed offers a little bit of information into his own personal view of Mark, calling him perhaps less than competent in terms of running the exchange. Now, Jed also went on to found, or at least co-found, Ripple and found Stellar Lumen. So this guy has a great head on his shoulders, and it was really a fantastic interview to listen to. So between these two interviews alone, it's 2.5 hours, so you can get plenty of information about what went down with Mt. Gox and beyond. And as said, Japan is known for having a bit of a difficult legal system, and here it seems as though some of the precedent that was established in the Mt. Gox case ultimately paid off, as an 18-year-old was charged in Japan for stealing over $100,000 worth of Monacoin in what's being called the country's first crypto theft case. One has to wonder what they're calling the coin check hack, which saw $500 million worth of NEM hacked. Not sure if that would constitute as a theft, I'd say so. But nonetheless, the affected app is the Monapi, which is an online wallet for Monacoin, and it seems 7,700 users ultimately were affected. Now, the cold wallet was not affected, which held 54% of Monapi's total balance. And it just goes to show why cold storage really is a fantastic solution. Of course, this isn't financial advice, just some thoughts from your old buddy Paul. The idea of having a cold storage device that requires physical access to break into and ultimately requires a PIN code is a pretty secure way of storing your digital assets. So it may be something worth considering if security is something you would like to take more seriously. After all, not your keys, not your coins. And Japan, as said, has been known for its really rough legal system. This is back from February 15th, 2018, so keep in mind this is not a new announcement. This is about a year old, and this is Yoichi Hirai, who actually resigned from working on Ethereum due to the penal code in Japan, stating that any individual who essentially contributes to an open source project may potentially be held liable for any breach of fiduciary responsibility in the eyes of the law. And that's a very, very strict and pretty rigid interpretation of any kind of law. And to see this kind of thing potentially being legitimate in Japan is a bit disheartening, considering that Mt. Gox was originally founded and was based in Japan. Monocoin is from Japan. A lot of these original crypto projects started there, after all. The creator of Bitcoin himself, Satoshi Nakamoto, chose a Japanese pseudonym. So very interesting stuff for sure, and a bit disheartening. Hopefully Japan can perhaps modernize a bit of its interpretation with the help of this Mt. Gox precedent as they work through the case, and maybe make things a bit more amicable towards contributors to open source. That would be really exciting to see, at least in my opinion. Now, speaking of a bit rough and cantankerous in terms of how they interpret things, the SEC is at it again, and this time the crypto czar, Valerie, and you know how I am with last names, I don't even want to try this one, Syzapanik, did I do okay? I'll just call you Valerie, if that's all right. Valerie told the crypto curious crowd, as said here, at Austin's SXSW conference, that apparently certain kinds of stablecoins could raise issues under security law. In particular, you're talking about folks who are buying into the ecosystem or buying this coin with the expectation that somebody else is going to be holding a profit or guaranteeing a profit or holding the price at a certain level. Again, that could raise issues under security law. So even just holding the price at a certain level may ultimately violate securities law. But backtracking a bit, this individual did say that the SEC would have to look into individually specific cases to ascertain whether or not each individual project broke securities law. One project, Basis, which was interesting to see, I haven't heard that name in a while, they raised $135 million from investors, and the SEC came knocking and said, hey, you're probably going to end up being a security. So they had to go through some refunding process, which is really interesting to see the idea that stablecoins may well end up being securities. I'm curious what you all think of that. Personally, I have my own hypothesis, and while this is a non-binding statement, it definitely gives a little bit of potential insight as to how the SEC may ultimately interpret these assets. And part of my hypothesis includes that, well, ultimately larger financial institutions with their liquidity and their coffers will begin to offer more stable coins, and this is exactly what we're seeing as 6 global banks have signed up to issue their own stablecoin on IBM's now live blockchain network. And this is different than Hyperledger. This is the Blockchain Worldwire, or BWW, in collaboration with Stellar, and this is going to allow over 44 banks on service to essentially do what they need to do and settle payments as they see fit using the Stellar network. Now, only 6 of them want to issue their own stablecoin for the time being, and this includes a bank from Brazil, a bank from South Korea, and one from the Philippines, along with 3 yet unnamed partners. Here's a quote from Lund. Talking about IBM, we actually talked previously about Mr. Lund on the Anthony Pompliano podcast. This guy has some great insights into the space. Quote, "We let the market drive the expansion and selection of the network incrementally. We're really feeling excited that we are on a roll to build something new and revolutionary that's really going to change the landscape of cross-border payments." That's been something that Ripple and Stellar have been looking to do for quite a while now, so it's extremely exciting to see a slow but steady progress on that front. Like I said, let me know what you think of the whole stablecoin potential security bank issuance situation going on below in the comments, or hop over in the Discord and let's have some dialogue about that, because this is some fascinating stuff. Now, Visa as well, a large financial institution, is looking to hire an expert for their Visa Crypto. It is a heck of an application. It's really a blockchain, not crypto job, as they said, but they're asking for quite a bit of qualifications. Preferably, you'd have to have basically be an expert in cryptography, have a computer science background, and preferably have a master's degree. But a bachelor's degree apparently would be acceptable if the individual had enough credulity in the space and assumingly enough notches in their belt. But essentially, they're looking to bring somebody on to help with the product strategy within the cryptocurrency ecosystem, and ultimately help Visa articulate where they need to go with this technology. So as a payment provider of this size, it's really exciting to see. Here you can see the position's particular responsibilities. We're not going to go over all of these and exhaust them, so you can check it out, pause the video now, or check out the link below in the description. As said, everything is sourced because citing your sources below is super important, because transparency. All right, next up we have Whopper coin. Nope, McDonald's coin. Boom, you can finally buy your delicious burgers using cryptocurrency. Well, not exactly. It's really more of a reward system known as Loyal Coin. So essentially, it is a cryptocurrency-based rewards program for customers that, as they begin to accrue these points, can eventually redeem them for rewards. Recently, we've seen a lot of fast food applications come live. We've seen not Bitcoin, Burger King. We've seen McDonald's. They now all have apps, so you can order through your phone and pick it up. It's really awesome. But now it looks like they're even getting even more 21st century by allowing you to accrue a loyal coin that you can then redeem for a tasty burger. Other major companies, as you can see here, like Starbucks, are exploring ways to accept in-store payments in crypto, and that in particular relates to Bakkt and a partnership that we talked about a couple episodes ago. Bakkt essentially offered a lot of capital to Starbucks to remain part of this partnership to eventually integrate Bitcoin payments. Now, there's no final date on that yet. But nonetheless, it seems to be that they are in good company with other eateries and fast food areas around the world. Speaking of fast food, it seems as though Canada wants to eat the lunch of short sellers, because that's exactly what they're proposing to potentially shut down after the Quadriga CX scandal, in which a CEO of the largest cryptocurrency exchange in Canada allegedly, unfortunately, passed away while traveling in India. There was a lot of speculation, considering there were some weird proceedings as to how the cold wallets were stored. Some of them were empty. Allegedly, this was the guy who passed away was the only one who had the private keys to get in there. So really a sloppy job all around. And it had the huge attention of all kinds of various media outlets. Really a Sherlock Holmes kind of situation. So what Canada wants to do, at least they're proposing to do, is, quote, to reduce the risks of potentially manipulative or deceptive activities in the near term, we propose that platforms not permit dark trading or short selling activities or extend margin to their participants. So no margin trading or short selling in Canada if this passes. I think that's something Tesla would like to see. Maybe they could just ban short selling altogether, and that would help their stock price. But unfortunately, it doesn't seem like that's going to be the case for Elon Musk, and it might be the case for crypto traders in the land up north, and that would be very interesting to see. Currently, BitMEX is not permitted in Canada or the United States at all. And it's one of the most popular leverage trading platforms and shorting platforms as well. However, other entities also facilitate margin trading and shorting that are assumingly flying under the radar of Canadian law, or maybe even find some loopholes. But ultimately, this explicit amendment, if passed, seems to kind of damper those activities pretty significantly, at least in the near term. Again, this is something that hasn't been passed yet. Quote, we may revisit this once we have a better understanding of the risks introduced to the market by the trading of crypto assets. So at least it seems as though the authorities in Canada are taking their time and trying to take a more tempered approach and level-headed approach as to how they should ultimately potentially curtail activity in the crypto market after the Quadriga CX debacle. So definitely interesting stuff, and we will keep you up to date as more information unfolds. Now, one crypto exchange that is still kicking, but is cutting their staff by half is BitHum, or is it BitThumb? ByThumb or BitHum? It's been years and I still haven't decided. Let me know what you think below in the comments. Give me a comment for BitHum or BitThumb, because it could go either way. All right, so basically they're cutting 50% of their staff. They have 310, and it's going to go down to 150. This isn't too surprising given the fact that we're in the middle of a dire crypto winter. The trading volume has decreased compared to previous years. That makes sense. And there's also questions about potential wash trading coming out of the Korean exchanges, as seen through Crypto Exchange Ranks, CER, which is a subsidiary of Hacken, their research. So pretty interesting stuff happening there. It seems as though even if there is wash trading occurring, it's not enough to attract a wave of new users to the exchange that will in turn then produce real capital flowing in. So really, it seems as though the crypto winter has kind of hit BitHum particularly hard, perhaps not disproportionate to any other crypto exchange, but just goes to show when you have a staff of 310 and you don't have the money coming in, they're cutting down to I guess what could be considered more of a skeleton staff. So hopefully they make it through the crypto winter, and hopefully this maybe can have a tertiary effect of pushing BitHum to perhaps use more legitimate volume, not insinuating that they are explicitly linked in any shady activity, but there is some opaqueness there coming out of a lot of the Korean exchanges in particular. So really interesting stuff. Just something to keep in mind that we are indeed in the crypto winter, in the thick of it. But that hasn't stopped the hardware side of things from rolling. Bitmain has released a new Equihash miner, the Antminer Z11. You can see here, this is just from yesterday. They are utilizing all new ASICs for the Z11 pack, 3 times more hashing power than the predecessor. I'm not actually somebody who engages in crypto mining. I've played around with it a little bit back in the day, but never got into it in a serious manner. So really, I can only look at this from a kind of hobbyist and somebody who's picked up knowledge just kind of working alongside the space. And we've covered a lot of this stuff in Crypto Coffee Updates, but suffice to say that despite not being able to dive into the technical specifications of this miner, it's definitely interesting to see, and a claim of 3 times more hashing power than its predecessor could potentially echo in a very interesting state of affairs, considering, as said, we're in a bear market, so it'll be interesting to see what the overall energy consumption for this kind of machine is. So something we will as well keep an eye on going forward. And CoinMarketCap, man, they've had a great couple days. They recently announced that they are going to add in a crypto asset grading software, which is partnered with Flipside Crypto. I took a look at Flipside Crypto, and they are a very interesting entity. I can't say I agree with all of their analyses and conclusions about these projects, but nonetheless, they're still early in development. They did have a $4.5 million seed round, so considering this is still something that's relatively early, as said, this is just from last November when they had that capital raise, it'll be really exciting to see how they, over time, create a more robust version of sussing out how to rate these crypto assets. So I'd say, all in all, even though I don't agree with all the conclusions, it's still very early, and I'm excited to see this kind of material becoming more mainstream, since rating these crypto assets is very difficult to do, since there's many fundamental metrics and drivers behind them, especially things like exit scams. Oyster Pearl was in the top 100 cryptocurrency coins for a while. And ultimately, the anonymous founder, Bruno, pulled an exit scam. So having something like Flipside to rate these kind of crypto projects and give a kind of encapsulated rating that is ascertained from a number of variables that can be quantified is excellent. And of course, CoinMarketCap taking advantage of that is ingenious and will definitely serve to reach a lot of users. And this isn't the only thing CoinMarketCap has going for them currently. They also are launching a crypto indice on NASDAQ, Bloomberg, and Reuters. So this is a huge amount of eyeballs that are now able to look at CoinMarketCap's data. Very exciting. It's going to show the top 200 is going to be called the CMC Crypto 200 or CMC 200, which is really neat to see. And there's going to be 2 of them, one that includes Bitcoin and one that does not. So it kind of gives individuals, I suppose, an idea of what Bitcoin does when you include it in the data set of all these other various crypto projects. And then what you can see when you take that out. And considering, as this article says, Bitcoin currently has just over 50% dominance, that's going to be a very interesting metric to see. And I was watching a presentation from Digital Asset Research, DAR, I believe that was the name of the organization. Yeah, I was watching a presentation from them, and they were saying that we are at an all-time high in terms of correlation of digital assets. And that is from their Q4 2018 report. So what that means is that even though there are these 2 indexes that you can utilize, there's going to be an unprecedented amount of correlation relative to what we've seen historically in the crypto markets. Now, whether or not that will eventually decouple and we will begin to see less correlation between Bitcoin and the rest of the digital assets that are listed on CoinMarketCap, that'll be fascinating to see. Historically, the context would say yes, but ultimately, correlation does not equal causation, so it'll be really, really peculiar to see how things unfold as the market eventually slowly and tepidly recovers in the face of all of these new adoptions and various hirings that are going on. Really fascinating stuff, guys. So with that said, I believe that's all we have to cover today. Thank you for hanging out with me and going over this information. It's always a pleasure to hang out with you guys, enjoy some coffee, and check out some news and events and see what we can glean from all of this information that's always flowing out of the crypto space. Let me know what you think of this content below in the comments. Thanks again for watching. Check out the links below in the description, and as well, join the Discord. It's down there. You'll have fun hanging out. Thanks again, guys. My name is Paul. We are Cryptide. And remember, the tide is rising, as is all of this global adoption. Man, can you see it? I can. Yeah.